let's get into what we are seeing now in the property market, and the first home guarantee scheme kicked in at the first of the month. It's of course stirred plenty of debate. How is it really playing around? Let's ask Anthony Landahl, Managing Director at Equilibria Finance, who joins me now. Anthony, great to see you. I mean, there's been so many people sort of almost talking about the cons here, but just to take a step back and remind us what this scheme is about.
Yeah, essentially it's enabling first home buyers to get into the market with a 5% deposit. So there were two main changes to the scheme that was amended and re-rolled out on the 1st of October, that being the thresholds have gone up on the pricing caps. So for example, in Sydney, the price cap moved from 900,000 to 1.5 million. The other thing is there's no eligibility criteria about income. So essentially what it does is remove barriers to entry for a lot more first home buyers, and that's bringing a lot of first home buyers into the market. 5% deposit on a $1.5 million property now is $75,000. So the time to save for that deposit, some data revealed, it's gone from about 10 years to about 2 years. So it's enabling a lot more first home buyers into the market.
But how are you going to service a $1.5 million, mortgage, particularly if, these prices are going to continue to rise because of this?
That's right. We saw the month of September a 0.8% increase nationally in price rises, which is the strongest growth since October 23. So that's on the back of supply side issues. Supply's down between 40 and 50% in some states. Now that's before the first home guarantee program has kicked in. So we're already seeing prices climbing back to October 23 levels. The quarter was 2.2% national growth. That's being led by Perth and Brisbane. But you're right, back to that point around first home buyers still need to demonstrate they can service the loan, and they're also purchasing properties with only a 5% equity position. So if we do get a market slowdown, there is some risk around their property being into negative equity, but spot on, they've still got to be able to actually service the loan, and often with a higher loan to value ratio, it might also come with a higher interest rate. So that's some really important stuff that home buyers need to understand.
Do you think then that there could be a bubble? People are going to take on this debt that they may not be able to manage?
Look, ultimately they've got to meet the serviceability criteria. So the number of people that actually default is very minimal. And the APRA regulation is a 3% buffer around servicing. None of that's changed. I suppose it's an awareness around carrying a larger amount of debt and having a lower amount of equity when you're going into that situation.
Well, okay, I feel like we've touched a little bit maybe on some of the cons. What do you think of the pros here?
Look, I guess the pros are it is enabling first home buyers into a property with a lower deposit. So you don't need that. One of the biggest challenges for them is their deposit. I guess what we're seeing is a lot of inquiry as of 1 of October from both first home buyers, but we're also seeing investors coming into the market over the last couple of months looking at, we're going to get some price rises here. We want to beat these first home buyers. We're seeing the lower quartile, maybe the lower 25-30% of affordable housing. That's really driving the market now, because that's where first home buyers are now able to position themselves. That's creeping up as well, that affordability. So the pros are around being able to enter the market, but we're really, I believe, going to see an upsurge in prices over the next 12-18 months on the back of this scheme.
Yeah, okay, so what does it mean then for investors?
Yeah, look, it makes it tough for investors. Increasing the pricing caps is meaning that first home buyers are fishing in some other markets now, often markets that investors might be looking at. So I think for investors, it's going to impact the market. We're going to see growth in markets that maybe investors have traditionally been able to purchase in. So I think the challenges will remain for investors. Some of that capital growth they might have been able to capture is going to get eaten up a lot quicker. They're not really getting any benefits from this program. It's just going to see prices go up, in my view, particularly in some of those more affordable areas, maybe the lower 25-30% markets, often where investors look at purchasing an investment property in terms of their capacity.
Is there anywhere that's looking, maybe a good find? I saw a real estate article the other day saying, where you can get a home with a $40,000 deposit. Is there any sort of those gems that you can see anywhere?
Look, there's always some gems out there. A lot of those markets have run. A lot of investors were looking in Brisbane, Adelaide and Perth, some of the regional areas as well. But a lot of those markets have taken off now. So investors were fairly subdued. They are coming back in the market. Some of those more affordable areas are now out of Sydney, out of Brisbane, out of the major capitals into some of the regional areas. Investors are looking in Darwin, Hobart, some of those areas as well. So it is going to be a bit of a challenge for investors with this influx of first home buyers.